Hello subscribers and followers, welcome to another video. I'm your host Todd MacSween, and today Philip MacKellar and I will be discussing what makes a good investor day. As many longtime Contra the Heard subscribers will know, Phil is a shareholder in both TransAlta and Bird Construction. Both of these companies recently had their investor days for shareholders and analysts alike, and Phil is going to take the opportunity today to compare and contrast those investor days. So welcome, Phil.
Hi Todd, thank you for that overview and for having me again today.
Absolutely. Excited to do this one. So you've mentioned you're going to be comparing and contrasting the investor days of TransAlta and Bird Construction. Maybe you could just tell us why investor days are important.
Sure, so I think there are a few reasons why they're important. From an investor's point of view, which is the primary view I take, investor days give you the opportunity to better get to know the investments you're making and better get to know the companies you've trusted your money with, what they're up to, and what their strategic direction is going to be. And I know conference calls go into this to an extent, as do quarterly announcements in general or annual announcements. But investor days, in my opinion anyway, get more into the long-term details and the long-term goals, extending out more than just the next year, which is quite important. And from there, an investor day gives you the opportunity to determine whether the company has a credible game plan. And credibility is key. And you can then measure and track what the company is doing going forward and use that past investor day as a kind of a guiding post to gauge management success. So that's what I would say from an investor perspective. From a management team's perspective, it's also important. It's the opportunity for you as a corporation to connect with your investors, highlight recent achievements, assuming that you have recent achievements to talk about, and describe where you intend to take the company, where you intend to go. And that's important because if you get it right, you can increase your company's valuations. You can get your analyst community excited about your stock, maybe even get analysts to re-rate your stock higher with more buy recommendations or higher sell targets or something like that. So it is the opportunity for you to tell your story in a credible and simple way. So those are the two perspectives I view it from, and I think both of the perspectives are very important.
Great. Yeah, there's some great points there. Thank you for that. Maybe we could dive into TransAlta specifically and Bird Construction as well, if you don't mind.
Yeah, I'll start with TransAlta because TransAlta to me had a very good example of, generally speaking, what to do. Their investor day was September 2021 for those who want to go look for it, and it can give you an example of what to do if you're a management team, if you're listening out there, management teams, and it can give you an idea of what to look for if you're an investor. So the first thing that management did right out the gate was they grabbed investor attention, and they did that by increasing their dividend 11%. And that's a great way to start your investor day. I mean, you immediately have headlines flowing your way. You'll be out in the press. New people will see that and they might tune into your investor day or click through and see what's going on. Old investors will get excited and feel rewarded, and analysts will sit up in their chairs and stop playing Minesweeper or doing whatever they're doing. So it's a great thing to start out with. The second thing management did was they then provided numerical and time-bound financial and operating targets through 2025. And so many corporate presentations don't really do that. They have dozens and dozens of slides, and occasionally they don't say anything as far as numerical targets are concerned. And that's a big oversight to me because it makes it very hard to gauge success going forwards. And then the third thing management did was they detailed how they would meet those targets. So they presented a strategy to investors on how they would meet their numerical guidelines that they've set out to the year 2025. So all in all, I would give TransAlta fairly high marks here for their 2021 Investor Day.
Okay, great. What if those targets or expectations of the future are unrealistic, though? I mean, how do you deal with that?
Yeah, that's a good observation, and that's really the trick. So many companies, and many companies do this all the time. They promise big and they underdeliver. Anyone can state ambitious goals. I mean, I could tell you that I'm going to be a billionaire in a week or something. It's humorous what sometimes happens. And to me, there are a few ways you can suss out whether the company has credible goals or whether they're pie in the sky. And the first way I do it personally is I look and see whether the strategy they are presenting makes sense given what the company does. So if they are a manufacturing company making computers and they have goals on expanding that or maybe getting into a related manufacturing product. That makes way more sense than if they're all of a sudden going to go into farming. I mean, something like that. So that is a credible thing to do. The second thing I would highly recommend people do is take a look at the management track records. So what has management said in the past, and how have they done meeting those past goals? It'll take a bit of digging for you to do that, but it's quite an important step. And if the management team is relatively new or they have a new CEO from another organization, try and go through what that person or individual has done at those prior companies. And doing that will give you a good sense of if they are full of it, or if the goals that they are telling you and the targets they have are objective and feasible. And then the third thing I would recommend is, are the quantitative targets they have measurable in a sensible way to you, to your way of thinking? For example, is the company promising a tenfold increase in sales over 3 years? Or are they promising to double sales over 3 years? Both of those goals are ambitious, but it's very clear that that tenfold increase is way, way, way more ambitious than doubling sales. So those kind of parameters should help people determine, to your point, whether the goals that the management team has presented are realistic. And circling back to TransAlta, I would say, given what I know of the company, given what the management team's done in the past, and given the quantitative goals versus where they are today, I would say they look like fair and reasonable goals.
Okay, great. Well, some great food for thought as it pertains to expectations, so I appreciate that, Phil. That was good. Maybe by contrast, we could talk about Bird Construction, though. I don't think you found their investor day to be quite as compelling.
I would say, yeah, it wasn't quite as compelling for sure. I should say before I dig into Bird Construction here that I'm long Bird Construction. Their recent investor day doesn't change my thesis on them. I like them quite a bit. And their presentation was average. It was uninspiring, I guess, but it wasn't terrible. So those are the big caveats. So anyone in Bird Construction, don't get super mad. But that's what I would say there. But to my point earlier, this is your opportunity as a management team to really engage with the investor community. And this is also the opportunity that management teams give you with which to figure out how credible the goals are. So for example, they didn't have a big announcement out of the gate like a dividend increase to grab investor attentions and generate some headlines. No M&A deal was announced, or news of a big investor coming on board, or something to really grab the street's attention. So that was lacking. Then they did have a slide deck, quite a long slide deck. Some of the slides pertain to goals, and they had a timeline, like 2024 strategic plan. That's a very clear timeline. But they didn't numerate very much. So for example, they said, we're going to increase margins and we're going to expand diversification. But they didn't say what they meant by increased margins. Are they talking about half a basis point or 4%? They didn't say. And then they didn't quantify what increased diversification means either. And that's an opportunity lost in my estimation. And they also have some really great slides about how much money governments have pumped into the construction sector, but they didn't take that one step further and say, we think we'll be able to bid on X percent of this, and we think we'll win X percent of what we bid on. And had they done that, it would have really helped the analyst community, investors like myself and others, really understand where they're going and how much they think they'll achieve. So, all in all, I would give Bird's Investor Day half marks because they did go halfway there, but they missed a few, in my opinion, key things which really could have driven home the message and connected with their investor base.
Okay, yeah, some good thoughts there. Thanks for that. Well, okay, so if TransAlta had a good investor day, Bird had an average investor day, do you have examples of companies that maybe had less than average investor days?
Yeah, I could talk about a lot of companies that have had less than average investor days, but I won't throw any under the bus here. I would say, though, that there are common themes with what make a terrible investor day, and the common themes can be overly ambitious targets, no targets at all, no strategy. Mainly it's PR filler fluff, and you see that quite a bit. And then the real tell, to me anyway, is when a company doesn't have any communication at all with investors, when they don't have investor days at all. That's quite a clear indication of what a company thinks of its shareholder base, for example. And I understand that there are sometimes good reasons not to do an investor day. If you're a tightly held company, family-run company, you might not need investors. So who cares? But by and large, that isn't the case. Most companies at some point will depend on their investor base for something. So, it makes sense, at least to my way of thinking, to tell your story well, is what I would say.
Okay, well, that makes sense. Good. Okay. Two questions, actually. So, do investor days matter to all types of investors, would you say, or more so to some and less to others?
I would say more so to some and less to others. I mean, if you're a commodity trader, it doesn't matter at all. If you're trading crypto all day, it doesn't matter. Within the kind of equity-only investors or people who focus on equities, I would say quants probably don't care because they're only looking at quantitative stuff. Day traders wouldn't care. But excluding all of that, regardless of if you're a deep value investor, a growth investor, a momentum investor, buy and hold investor, you probably want to know what your company is planning and doing and how credible their goals are. So I would say it's pretty important. And then specifically to us here at Contra the Heard, we're often evaluating turnaround candidates. Not all of our companies are turnaround candidates, but a lot of them are. And Investor Day presentations often go hand in hand with turnaround prospects and assessing those turnaround prospects. So, this is something that we do quite a bit. We're looking all the time at companies, and when a company is in a turnaround and when they present a good, credible turnaround strategy, that really goes a long way to bumping it up on our watch list. So I would say all in all, this is actually somewhere where we as a company have maybe a bit of an edge over others just because we dig through so many.
Right. Okay, good thoughts. And my second question, maybe a little bit more philosophical, is do you think that the market reprices too quickly after an investor day for retail investors to participate well? Or?
That's a really good question. I would say sometimes it can, for sure, but in my experience, that's not been a concern for me. When I think about a turnaround strategy, for example, if it's a company that's in the dumps, even if they have a really clear, concise message and set of goals, it's going to take the market quite a while to accept those goals and to get comfortable with them. So that should provide retail investors with enough room to get involved if they want. And even if it's just a regular investor day like the ones that TransAlta and Bird Construction have had, again, it doesn't reprice that quickly. At least you can look back at the charts and see that if you still wanted to get involved with these companies, you could. So that's a really good question. But by and large, I would say that it hasn't been a challenge for me and in my experience.
Great. Okay. Well, any closing comments here before we wrap up, Phil?
Well, I would say that I hope this has been useful for investors out there who are listening and wondering how better to go through Investor Day presentations. And if by chance there's a management team out there wondering how to better connect with their investors, I hope you found this useful too. And I think the formula is pretty simple. Grab investor attention with something out of the gate, provide numerical and time-bound targets, operating financial targets, and then detail how you're going to do it. And if you can do those things, or if you can find companies that are doing those things, you should be in pretty good stead to go through your watch list, refine your watch list, and eventually buy good companies.
Right. Okay. Fantastic. Well, thank you very much, Phil. I really appreciate your time. I'm sure we'll have another good session coming up shortly.
Thank you, Todd. Much appreciated.
Hi, everyone. I hope you enjoyed today's episode. If you'd like free access to our paid subscriber content, just click the link here and enter your email address here. And don't worry, we won't spam you, but if Contra does ever offer a major discount to the newsletter, we'll let you know. Otherwise, you'll just be receiving our premium video content through this channel. So we look forward to seeing you there. Happy investing.